Hey, welcome. Thanks for joining. Wanted to share some of my personal favorites when it comes to technical analysis. I'll say indicators per se, maybe not in this particular order, but we're going to talk about the anchored VWAPs, horizontal fibs, in terms of retracement and extension levels, moving averages. Specifically, when I say moving averages, like in a multi-time frame environment, so like weekly, daily, and smaller time frames, for the moving averages overlaid on, say, the daily time frame, the 4-hour time frame, things like that. And also one of my all-time favorites, it's just the 50 SMA. This is a Stan Weinstein hack. And I think to round it all out, there's a set of moving averages, and they remind me of the Blue Angels. So I think with all that being said, these indicators and what I'm going to share with you could be for any asset. In this case, I am focusing in on Solana. This is one of the trades that I'm currently in. Right now, for starters, we're on the daily time frame. But when I look at the price action for Solana on this particular chart, there's something that I can see right off the bat. One of the things that I would encourage you to do is when you open up a chart, look for any horizontal support and resistance. So you can see right here, I drew this, and this dates all the way back to December of 2023. I like this because we had placed the trend line right above there, and we had a nice little pop to the upside. We had a nice breakout, and then we had a retest. We had several retests where this trend line reacted nicely or positively to it. So what is that? That's 1, 2, 3, 4, 5. We had a false breakdown to the downside, but came back up. I can't remember. This is number 6, 7, and 8. So this is a valid trend line for sure for me. Here's another area that I'm looking at. I'm just looking at the peaks and troughs of price action. By the way, when you think of trend lines, don't think of a trend line, something drawn with a pencil or a pen. Think of trend lines being drawn with a crayon per se. But I like this one because at the peak right here, price action rolled over, came back up again, hit it twice, rejected. We had another rejection. Then we had a strong breakout to the upside. And then when price came back down, and again, this could be subjective of where we place this trend line, but regardless, we have nice support acting right here as well as here. So in my opinion, this is a classic SR flip, support and resistance flip. So right now, this is acting as overhead resistance right here. And then when price broke out to the upside, this is now acting as support. So these SR flips, these are very common. I'd encourage you to keep an eye out for, again, for these horizontal support trend lines to get your chart started. The next thing let's talk about is the anchored VWAP. This is a classic from Brian Shannon. He's a chartered market technician, and he's really brought these back on the map. So what I did is I anchored the VWAP right here. This was, it's like March of 2024. So I'm going way back, but I'm just kind of trying to illustrate a point. Where you place the anchored VWAPs, they're typically at major swing highs or lows, or like the beginning of the year, some key specific dates as an example. But in this case, I want to go up to this high back here. This blue line right here, this is your anchored VWAP. And if you're wondering what these additional lines are, these are the standard deviations. So this is a +1 standard deviation, +2 standard deviation, and then a +3 standard deviation. If you want to dig in and open this up, just double click on the actual VWAP itself. You can see under inputs right there, anchored VWAP, but we've got the bands. So here's the first band, second band, third band. And as I alluded to, I've got this orange line right here. This is the standard 2 deviation. This olive green is the 3. And this black one per se is the 4 standard deviations. And you can go make them larger, make them smaller, which in the future, when cryptos get into new price discovery, or some of these stocks that get into new price discovery, I would encourage you to adjust your standard deviations and just make them larger. But for now, let's just leave them right like this. And then you just want to be sure that you've got the boxes checked. So we've got the upper band box checked there, the second band there, and then the third one. But what's also cool is you can go the opposite direction as well. You can go the lower bands. But in this example, I'm just going to stick with the uppers. And the reason why I wanted to share this with you, please hear me out on this. This is key, so key. When price action is below VWAPs, the smart money typically does not hop in. They wait until price gets above it, right? And this is, again, they start to do their progressive buys when they layer in. And why is that? because there's quite often a lot of false breakouts. So they want to make sure that when they do take a position, gosh, there's so many. I'll count this as 1, 2, 3, 4, 5. But what I like about this one is we had a breakout to the upside, and then we had a pullback or a retest and a nice bounce that respected it. But this is ideally, when you make these buys, you want to make a small position because if price breaks out to the downside, you haven't lost too much of your cash. So again, smart money, you want to make sure that you anchor that VWAP at the high, right? And then you wait till price gets above it. And that's when you want to be serious about taking a position. And you can see right here, we had a nice shadow or a nice wick that came down to this VWAP, which really tells me that this is a strong anchored VWAP. Then if you notice this +2 standard deviation and 3, and even the fourth one potentially, but if I pull this apart a little bit, you can see right here, it's textbook how price action respects or reacts to these anchored VWAPs and these standard deviations, right? Didn't like it right here, tried for another breakout, flagged a little bit right here, did break out. Then once it got close to the top of it, didn't like it again, and price just eventually came back down to the downside. So you can see these definitely do play a serious factor in how price action responds. Here's another textbook got just snagged and hung up here for this looks to be about a week or so. So right now, for me, we're worried about price getting over this +2 standard deviation, but I feel really confident that we're above the actual anchored VWAP itself. But then when price does get above it, and we've got this one to contend with, so this is definitely going to be a level of interest as well as this one right there. So that's my 2 cents on the anchored VWAPs. By the way, if you're still with me in the video, thank you. And if you could stay till the end, I'm saving one of my actual absolute favorites till the end. It's so simple. But so again, if you're here, thank you. And just stick with me. I just want to just do some real basics. That is moving averages. Moving averages are at the heart and center of every trend trading system. With crypto as an example, or even these TradFi markets, because volatility is going to be here to stay for probably the next few years as this world 2.0 evolves. So moving averages, especially on a multi-time frame environment. So one thing to call out here is we are still on the daily time frame, but if you notice, I checked on the weekly moving averages. But this is a really nice looking setup on the MA. So you got the SMA 100, which is below the EMA 55. It's a little tough to see, but this green line right here is the SMA 50. Every time I hear of the SMA 50, I think of Stan Weinstein, and more to come on him later in this video. We had a bearish crossover of this EMA 55. It came down through the SMA 50, but I'm not too worried about that. I'll share with you why in a second, but based on how this angle is going of the 55, I see it doing a bullish crossover to the upside. Then the reason why I wasn't too worried about this bearish crossover is because we've got the EMA 20 just below the EMA 9, which is absolutely textbook. The thing I want to call out is that price action is above all of the moving averages, right? Here's something to pay attention to when it comes to these moving averages. But if you notice, when price gets too far away from that moving average, reversion to the mean is very common in trading. So when the professional guys say, hey, I'm going to sell into strength, this is a textbook example when you get this parabolic move right here, but then you get all of this distance from the moving average. This shows you that we're going to do the reversion to the mean, and there's a lot of strength, but the farther price gets away from these MAs, the more it's going to act like a slingshot and come back. It's going to retract back or closer to the MAs. Here's one thing. When you see moving averages far away from the MAs, this is not a time to get in. Or let me repeat, it's not the time for the first entry. The closer the price is to the MAs, like right here when the EMA 9 was just above the 20, right? This is the ideal. When price is close as possible to these MAs, that's when you want to make your entry. Let's get rid of the weeklies, and these are the daily moving averages. It's a little crowded. It's a little more busier than the weeklies. Here's the daily moving averages, and this looks really nice. It's a little congested. Let me walk you through it. So here's the SMA 200, right? And you can see this right here. Price came down and reacted nicely to the horizontal trend line that we drew, but also the SMA 200. Then also we've got the SMA 100, which is the orange line. The green one is the SMA 50. You can see right here, it's barely touching one another, but just really looks nice. And then you've got the EMA 55. And just above that, you've got the EMA 20 and the EMA 9. Okay, so that's a little bit about the moving averages. So what I'm going to do now is I'm going to focus in on this area right in here. I'm going to go back to the anchored VWAPs because I want to share with you something, as well as drawing some more horizontal support. Let's go ahead and anchor a VWAP to this high right there. Isn't that interesting? So let's dissect this a little bit. All right, so remember this blue one is the actual anchored VWAP. And here's a little quiz if you remember. What's this one? This is the +2 standard deviation. Here's your +3 and your +4. But this is what's very interesting. When price rolled over right here a few weeks ago, you notice how price action tried. It really gave its best effort to bust through to the upside on the anchored VWAP, but it got completely rejected. And this is what's interesting. When price breaks through these anchored VWAPs, it's typically explosive. And here's a textbook example. Popped right through it, right, for a breakout. Now it came back for a textbook pullback. So to me, this is an ideal entry for us. But even though right here is as well, so if we're doing some pyramid buys, progressive buys, we're putting in a very small percentage until we get some confidence that price is actually going to continue to move to the upside. But what's very normal, I've learned this when I'm taking my chartered market technician coursework, is that these pullbacks right here are 100% normal. And not only that, this is where these is waiting to put some more money in right here. So this is a textbook example of why you want to wait until price is above this VWAP from this main pivot high. Then in closing on this last thought for the VWAPs, remember, this is going to cause some issues when price gets up to these levels. So that's why I highly encourage you to continue to use these +2s, 3s, and 4 standard deviations. So let's do a quick, how do I use my horizontal fibs? And there's so many different ways to do this. This too is subjective, but I'm always looking for a lot of history. I want to look to the left quite a bit just to get a better feel from a strength standpoint. So I'm looking at this level right there as a swing high, and I'm looking at this level right here as a low. So let's go grab some of these fibs. I'm going to anchor it right here, and I'm going to swing it right down to this level. I'm going to swing everything over to the right and just take a peek. So when you do this, what you're doing is you're just looking for some confluence of how price action reacts to these horizontal fib levels. You just got to eye it a little bit, but this one actually makes sense to me because you can see right here, it respected it nicely. Respect, we had a false breakout. We had a nice overhead resistance, right? And then even this, I'm looking at this right here. This is the 786. We had a false breakout here on the 786, a few false breakouts right here, clean rejection. And then we had a nice bounce to the upside. Not only that, we hit the 1272 right here. And then we came all the way back down to the 786 for a retest, a textbook retest, right? And now we're moving back up to the upside. When I use these horizontal fibs, I try to zoom out as much as I possibly can. I could even go farther, but for this video, hopefully making some sense here, because in the spirit of time, do this as quickly as I can as an introduction. Then what I'll do is I'm going to get rid of these guys. And then I'm just going to place it right here. We're going to do a rinse and repeat. Tighten it up a little bit. And by the way, again, if you're still with me, thank you. I'm excited to show you this really simple indicator that really helps confirm or validate my thought process. So I'm almost there. Let me just share with you on this fib. So again, I placed it right here at the high, and then I anchored it right here on the low. And then again, I just look for some confluence. Just bring this back in so we can see. Here's what I can tell you. Lock this in your memory bank. These 0.786 levels, when price hits it for the very first time, so when like here and here, it typically will get kicked hard. It's like getting kicked in the teeth from a horse or a cow or something. It really hurts. Not all the time, but it can really hurt. So just remember this, that when price is coming up to it for the first time like this, right, it can hurt. Here's a classic example where it did break through the 786, but then it got kicked hard to the downside. And what's ironic is it rested right here on the 0.618, and that's the golden zone. If you're not familiar with the Fibonacci sequence, I think it was created in the 1600s. So this indicator, it is time-tested, battle-tested, but this is a mainstay, absolute mainstay in your bag of tricks for trading. Again, all professionals traders use it in the TradFi markets, the Forex market, as well as the crypto market, because they do work. If I'm looking to where price is going, because these are all-time highs in Solana's case, right? So what I'm now doing is I would probably leave these fibs, okay? And typically price action will find the 1.618. That's an extension level. When you get down to these levels, the 0.618, not the 1.618, but the 0.618 or the 0.786, these are retracement levels. And these, by the way, just work like absolute clockwork. And then here's from an extension standpoint for new price discovery, which will help you identify some key levels of where price will potentially roll over. So the 1.618, the 2 level, as well as the 1.14. So there's really no telling as of right now where price could get hung up and roll over. But these are some key, absolute key levels. Then what I'm going to do is I'm going to focus on this high right there, as well as this low right here with the new set of fibs. And now what I'm going to do is I'm going to take it down to the 4-hour time frame. But if I want to show you something. So these are now the new levels when price action is moving to the upside. It's just like clockwork. But anyways, right here where price is just hanging out here, it's hanging out on the 0.236. It's respecting it nicely. Then right here, that there's potentially we're going to get a reaction there. But here's what I want to also call out to you. This 0.5 level, this basically means this is the midline. If you think about from up here down to here, this is the midline, the 50% level. So typically when price gets above here, it typically gets explosive. But in these examples, we had a false breakout. But this is an area where definitely we can get some reaction, some negative reaction. But when price does finally pop through it, it's typically explosive. The last thing I'm going to do right now is I'm going to place another anchored VWAP. Yeah, so this is interesting. As I just alluded to, here's the 0.5. When price breaks through it, it's typically explosive. But at the same time, when price breaks through this anchored VWAP, that's also a typically explosive move. But in this case, remember, we had some false breakouts. So if you're sitting on the sidelines and waiting to get in, this is the level where you want to wait. You just wait and you start to nibble. You nibble in, okay? So here's one more. So in this scenario, we've got the 786, right? And price has not hit it yet. So this is almost, I hate to say almost a guarantee, but it's a really high probability that when price hits this 786 level, not only that, look at this. You've got double confluence right here with a +2 standard deviation from this anchored VWAP right there. So again, double confluence. So again, high probability price could potentially break through like a false breakout somewhere up here, but then it's going to get kicked back to the downside. So this is a nice little level right here where if you're playing the game of probabilities, you can take some money off the table and lock in some profits and then buy back in when price resumes, finds a level, and resumes back to the upside. But the last thing I'll say is, remember, you've got these guys that are going to act as overhead resistance. All right. So 2 more things, and this is a wrap. This is going to be a Stan Weinstein hack. And then at the very end of the video, I'll share with one of my favorite indicators. I keep laughing because it's so simple. All right. So what I did is I overlaid this indicator as the 50 SMA. We're on the daily time frame. But what I want to do is change the time frame to let's go to a 3-day time frame. If you just did this one thing, this absolutely one thing and nothing else, and you just use this indicator on a multi-time frame environment, again, this was your go-to. You know the movie with Tom Hanks on the deserted island, and his best friend was the volleyball. He named Wilson. This is your new Wilson. And let me explain. So again, we're on the 3-day time frame. You can notice when price is above it, it's just like stress-free, no worries. And then right here, when price falls below it, the reason why they call this the CC 50 SMA, CC stands for color code. And by the way, let me show you. It's right there. CC SMA 50. But if I were to do a measured move, and if you bought in, say right here, and you sold right there, you would have made 595% in 248 days stress-free, right? And then if you did the same right here, and you're still in, but in 105 days, you're up 60%. It's really that easy. Okay, so if you can, just lock that one in your memory bank, this 50 SMA overlaid on a 3-day time frame. You could go to the weeklies, but the daily gets a little noisy. You'll be doing a lot of trading. But here, it's just much safer. You can lock in your profits. You don't have to be glued to your screens or your charts. Okay, so don't laugh. I'm going to overlay now. Actually, you know what? I got one more. Shoot, I've got one more before I get to my favorite. So this is called the triple MA forecast. So this is the SMA 100, 150, and 200. And let me explain. And I've done this in one of my other videos, but we've got the 200, 150, and then the 100. This is an absolute textbook setup right here. And you just think of the Blue Angels. I grew up in Seattle, and Blue Angels are near and dear to my heart, but this is like the perfect, absolute perfect formation. And you can see how the moving averages are not too far apart from one another in terms of a spread. But remember when I was alluding to at the top of the video, when price action gets too far away, like it is here, it's a reversion to the mean. So when you see price, just pay attention to these gaps in here. But when you see it getting too far away, like it is right here, it's going to eventually find its way back down to these moving averages. And when price gets to the moving averages, this is the ideal time to buy, not when it's all the way out here and extended from these MAs. All right. And then conversely, let's take it back down to the daily to illustrate a point. Yeah, this is also just a cool hack, is when price falls below it, like it is here, right? You're all the way out and you're just sitting there waiting until price hops above it, and you can see where the moving averages start to break apart, spread apart, and they start to trend up. But this is ideally your entry. And if you were to sell all the way up here, just as an example, all right, let's say absolute worst case right there, you would have missed about an 84% move. You would have saved 84% of your money, right? This is where real money is made in a bear market, when you enter in down here and not up here. And if I were just to overlay that 50 SMA right there, and I'm going to go back. Yeah, and I'm going to get rid of those Blue Angels. So I'm going to illustrate one more point. If I measure this, right? So if we were to sell right here, sell right there, and I'm not going to say we bought in here because we can dissect this later. Let's say we bought right there though. Again, yeah, 87% decline you would have missed in 650 days. So again, if this is the only indicator that you use, you're 99% better than everybody else out there. But here's the key. Remember, you're going to use the 50 SMA, but on a bigger time frame. So like a 3-day time frame as an example. You'll be extremely pleased in the months and years to come. All right, here's my absolute last one. This is called the Fishnet. It's a bunch of MAs, and they start at increments of 5. So 5, 10, 15, 20, all the way up to to 200. I'm going to take it back down to the daily time frame, but here's what I want you to pay attention to, okay? I really like this a lot, and I use this as kind of validation when I think it's safe to enter or not to enter. But I want you to train your eyes on, there's a lot, but see how the MAs are they're binding tight? I think I call it like a surfing analogy. If this is under the water and this is the inertia building a wave. So there's a lot of strength when you can see these MAs just binding like this. And then you can see this right here where it turns dark orange and they're binding together. That also tells you right here there's a ton of strength. But this is the key. A lot of times it's very difficult to know when to sell. So I'm going to spread this apart a little bit, okay? To help validate when to sell, this is really easy. So see how here the moving averages, they're nice and uniform and the spread is fairly even. Then they're binding right here, which is creating strength or support. But right here, they just start to get sloppy, and think of like an accordion where they start to spread apart. And when you see this, is meaning that there's wrinkles in the armor. It's starting to deteriorate. Things are going to start to break down. So again, when you see this, don't overcomplicate it. That's when you want to start to take some profits off the table, or you know that this trend is about coming to the end. Let me just share with you one more example, okay? But just notice, remember, we're on the daily time frame. And if we were down here, look how thick that is. All the MAs are just bunched together, okay? And we want to wait till price action breaks above it. And then you can just see how price is riding up it. But notice this right here, it starts to dissipate. So if we were to look right here, this looks completely different than this right here. Yeah? So this is eluding strength, and this is eluding that there's still some strength, but we're coming to an end, right? And then right here, see how the moving averages start to spread apart? But we still got strength in here because of this down here, this base. But you can see how they're starting to spread apart, okay? So this is what I love to use to know when, because a lot of times when I want to sell, fear and greed kicks in, my emotions kick in, it's hard to think clearly, blah, 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 right? But now I actually am in a position on Solana that right now I'm not worried. I've got this whole tree trunk, that's what you want to call it, even though I was using an ocean analogy. But this is acting as a ton of support. Remember, it's a completely different look than this. Yeah, so that's why I've taken a position and I'm not too worried. And then if I use this Fishnet indicator with the other indicators that I shared with you to identify support and resistance, this is the one I use typically at the end to validate my thinking. So that's a wrap. That's a lot. And if you're still here, thank you so much. And if you have any questions, feel free, ask me anytime. Cheers.